Participate in commercial banks has given Kenyan small and medium-sized enterprises hope despite the gloom brought by the COVID-19 pandemic. The agreement is aimed at enhancing access to credit for SMEs through an 8-point stimulus package of 3 billion shillings capital approved by the National Assembly. John Minor reports.
The partnership of credit guarantee between the Kenyan government and the 7 participating commercial institutions, including KCB, DTB, NCBA, Cooperative, Stanbic, Credit Bank and ABSA, intends on improving MSMEs' access to credit, their operational and growth needs, protecting jobs created in the sector, and cushioning the market from the shocks of the COVID-19 pandemic. Over 7.4 million MSMEs in the country employ 14.9 million Kenyans and contribute up to 40% of the Kenyan gross domestic product.
The Kenya National Bureau of Statistics indicate that over 7.4 million of MSMEs in the country, which employs 14.9 million Kenyans in various sectors of the economy and contributes about 40% to GDP. So you can imagine how delicate and how important this sector can be. 40% of an economy are contributed by this sector.
The Ministry of Industrialization officials have insisted on the need of this program, saying that the interventions were necessary in order to caution MSMEs against the impact of COVID-19.
MSMEs in Kenya represent an important proportion of economic activities and livelihoods, constituting over 98% of all businesses in the country, while accounting for 30% jobs created annually, 34% of the GDP, and 12% of the manufacturing sector.
Chairman of the Kenya Bankers Association, Joshua Igara, confirmed that up to 30 to 40% of the credit is loaned to MSMEs, affirming that the credit guarantee scheme is a timely boost for the sector.
The lending for us as an industry, we will say between 30 and 40% of our lending goes into this segment, knowing that the industry is lending close to 2.6 trillion shillings so far.
This comes on the backdrop of many Kenyan commercial lenders announcing reduced earnings due to bad loans and huge loans defaults attributed to the tough economic time occasioned by the COVID-19 pandemic. Joan Minor, TV 47.